We just got some data on home values, and what we see are prices starting to decline. Does that make it the perfect time to buy, or should you wait? Let's jump into the details and get to the bottom line. Good morning. Some important information to go over with you today, but let's start with some of the staples that we cover every single week. And this comes from data that we get from the Mortgage Bankers Association and their mortgage application survey. This shows purchase application volume week over week. And in this most recent period, that volume was relatively flat from one week to the next, only dropping by 0.1%. That puts the year over year purchase application volume down by 36.5%. Average interest rates for a 30-year fixed rate mortgage are, of course, something we're keeping a close eye on. And this report polls a wide variety of lenders who report their data points on where rates are. This gives us the average coming from this survey, which has declined and improved once again from 6.42% down to 6.34%. So great to see that. Let's take a look now at some of the data that we just got when it comes to home value. So, the National Case-Shiller Home Price Index, which really is considered by most industry professionals to be the gold standard for appreciation, showed that home prices fell by 0.5%, a half percent, in the month of October. And although home prices have been softening a little bit, they are still up 9.2% on a year over year basis. So, what we're looking really at here is a deceleration in the pace of home value appreciation. That's decelerated from a peak of 20.8% down to 9.2%. But that doesn't mean that home prices are down 11.6% from their peak. It means that home price gains have slowed to a pace of 9.2% annually at this current time. Home prices have only declined by about 3% nationwide from their peak, which is certainly a softening, but it's pretty far from a crash of 20 to 30%. And another interesting component here is if you look at the 20 city index, which gives us data from the 20 biggest cities in the country, that's down 4.6% from its peak. So it suggests that the major cities are declining a bit more than the overall nation as a whole. One other interesting point of information when it comes to home value is the report we got from FHFA. Remember, that is going to be a report that gives us information on value, but only on loans with a conforming loan amount. So it's going to exclude cash purchases and jumbo loans. So, therefore, a lot of the higher priced properties not being included in this data. And it's important to note that because what we saw in the data from FHFA for the month of October was prices remaining flat. And what we saw from FHFA last month in September, again, based on the data that was released, was a 0.1% increase. So those are both stronger numbers than what we saw with Case Shiller. And it's important to really see that because that gives us some pretty reasonable ability to interpret and say that some of the decline in home prices have been more concentrated in the higher priced properties. That also lines up with the decrease that we're seeing in big cities more so than other areas of the country, because, of course, the biggest cities are usually going to have higher real estate prices. So, therefore, more jumbo purchases or cash purchases at higher amounts. Now, when it comes to information on what's going on in the housing market, the value is one side of the picture, but we also want to have data on activity. So, Jake, fill us in a little bit on what we're seeing for some of the most recent data we have on home purchase activity.
Yes, sir, Kyle. Be happy to do so. So we got a report back this week that showed pending home sales. And as a reminder, pending home sales are going to be when you have a signed contract on an existing home. Now, this fell by 4% in November, which was weaker than experts had expected. And overall, sales are now down 38% year over year. Now, if we switch the perspective and we talk about new home sales, which now this will be signed contracts on brand new construction homes, things that have never been lived in before, this rose 5.8% in November. And this was much stronger than what industry experts had anticipated, which was a 4.7% decline. So, pretty far off the mark with regard to new construction sales. Overall, sales are down 12.3% in that category compared to last year. And we are getting some commentary from the National Association of Realtors that is starting to acknowledge the falling interest rates. And they feel that this should pick up home buying activity and that should start to rebound within the next couple of months.
Good stuff, Jake. We definitely like to hear some positive outlook for the future. And it's important to keep in mind when we look at transaction volumes right now, things adjust seasonally across the country and especially in the Northeast where we're located. So that's going to impact the volume of transactions when you get into these winter months. Last piece of data to take a look at is information we got from CoreLogic and their loan performance insights for the month of October. What this provides is data on the performance of loans and the delinquency levels within loans. So this showed 30 and 90-day delinquencies really remaining unchanged, and loans and foreclosures still staying at these multi-decade low of 0.3%. So, for all of the talks about housing potentially being unhealthy and risks within the housing market, delinquency figures being that strong at these very healthy low levels is certainly a positive indicator. For a little bit of perspective, the total delinquencies were more than 6 times higher during the housing crash. So, hopefully, these data points we've gone over this week are useful and you can pass them along in the conversations you have with clients and other industry professionals. We want to continue to try to equip all the real estate professionals we do business with and the ones we haven't done business with yet on data that's going to help you better operate in this market. So give us some feedback if you have any suggestions on how you'd like us to do that going forward, and feel free to drop a comment or send us a message. Otherwise, we will look forward to seeing you next week in the bottom line.